Hello, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 23rd of June 2023. First chart, as usual, is the US dollar index futures. We work our way from the previous highs in September, October last year. Here was the first breakdown from those highs. We draw a line across from that. You can see price was unable to recover back above it here. Price continued to break down until it made lows, which we noted at the time down here. We've had a recent little push higher. Here's the lows of the range that's adjacent. We're expecting supply to be drawn out at this level, and that at this point in time stopped price recovering back above that level, and prices come back. It's effectively testing the little mini breakout for strength around the 102 level. This week saw price dip below the previous bar's close, effectively testing the market for supply. And down here, the volume was below average, was certainly reduced, and it suggests that not much supply or selling pressure was drawn out when price pulled back. That allowed price to then just pop up by the end of the week to close as a modest up bar for the week. This is a good little recovery here, and with selling pressure appearing to be quite low, you could possibly expect the market to continue to attempt to push higher next week. I doubt that it will challenge the 104 level, but a modest push higher, perhaps something like this bar next week in response. Next chart is the E-mini S&P. This is S&P 500 index futures. Here's the current interesting level. You can see the period of consolidation that's taken place prior to the breakout above this level. Little test for supply here, and a push up, which I noted last week didn't really reach this more important level just above, which is slightly unnerving, but it may just be that there's a fine-tuning level in here. Some of these levels, when you project them across from the past, don't always line up perfectly, and there's a little amount of what I call fine-tuning. You might find that a little bit of increased supply starts to be drawn out at this level, and it will continue up to this level if price is able to move higher. Anyway, this week has seen price move into consolidation mode, which is exactly what you would expect to see when price accelerates higher. Spread has reduced considerably, and volume was well below average, so selling pressure appears to be low, and that should allow the market to attempt to push higher in the future. US Treasury 10-year note futures. We're getting a little bit of a complex level now. They're the most important lines. I suggested last week that the market was more than likely going to try to go sideways, which is effectively what it's done this week. It's moved higher, but modestly higher on reduced volume and well below average volume, which suggests there wasn't really a strong intent to push higher. I expect the market overall is going to move sideways between this 112 and 114 level, particularly in the near term. If there's a bit of strength in the US dollar, this market might move a little lower. It's more than likely the market will move sideways at least next week and attempt to absorb supply and consolidate sideways between 112 and 114. Copper price futures. Copper price futures this week attempted to move higher. You can see here. We'll put in some lines so you can see better where we are. Here was the lows of the range. A little bit of a complex area developed there with an attempt to hold on. Price did break down there, but attempted to hold on. Here's the real breakdown bar. And there's the buying support that came in, which has triggered this little push higher. Price did attempt to move higher this week, but supply's been drawn out, and that pushed price down. The market did close within the range of the previous bar, So all is not lost, you might say. The market's attempting to hold on. There is some strength there, some underlying strength in the market, and that was holding the market up. Volume did reduce, but it was a slightly above average, only just. So there was selling pressure there. I would expect the most likely outcome next week is a little test for supply bar, something like that. And hopefully it'll prove that the selling pressure has reduced. That would allow the market then to push higher in response. If the market tests for supply and increased supply is drawn out, you'll probably see the market move back to this level. Gold price futures. Gold price futures were under a bit of pressure this week. Here's the lows of the current level. You can see the market had been trying to hold on for a period of time, but this week price has broken below that level, and volume was actually below average. So it wasn't an active sell-off. It wasn't a well-supported sell-off, but the market has broken below this level, which is important. If this is proved to be confirmed over the next week or two, I'll probably expect price back to this level, but we'll see. This was an important level. It comes right back to this breakdown line here. You can see the market was unable to recover above it, and then as time went on, there was a period of absorption required for price to get through this level and break out above it. And then when the market was pushing up to the next higher level, there was a period of absorption required there before price came back and retested this level for strength. And prices moved back out, drawn out supply here, been trying to hold on within this range, but price has broken below it this week. Now, there could well be a reversal next week. We'll just have to wait and see how this plays out. You could get this happen, in which case all is well and the market may attempt to move higher in the future. But if supply continues to be drawn out in this market, you'll probably find price moves lower over time, and that would bring this 1800 level back into play. So we'll just have to wait and see how this plays out next week. If there's a reversal and a recovery back above the lows of this range here, that would leave price well placed to push higher again in the future. But a full breakdown will see price back to this sort of level, whether it comes right back to the 1800 or just adjacent like through here. We'll have to wait and see. But there's certainly been some weakness drawn out in this market, despite the volume being below average. Silver price futures. Now, silver price futures are always a little more volatile than the gold price market. You can see that was the case this week. There was some attempt to recover here. The price moved higher in response, but price has moved below the lows of that range this week. Now, same as I said about gold, there may be an attempt to reverse next week. We'd actually have to look more like this, taking into consideration the big gap you've got here. This market does gap around a bit because it is a little more volatile. But a reversal of some sort, anyway. I'm not saying that's going to happen. It's possibly more unlikely, but we'll have to wait and see. The highs of the original accumulation is back here. And you can see that price was thwarted and there was a period of absorption required through here, which failed. Price moved back, tested this level for strength. And you might find if this is really confirmed as weakness, then price, similar to gold, comes back to these levels and tests it for strength in the future. Now, similar to gold, there is a level that goes through there, or it might even be there, but we're talking this sort of level in here. We'll just have to wait and see how this plays out next week. You'll know pretty early next week, I imagine. If there's ongoing downside follow through on any sort of volume, this market's moving lower. If there's an attempt to reverse and it can't get back above this level, so it bangs its head here and then rejects and moves lower, it's more than likely going to continue lower. But if it moves up and it can recover above the lows of this bar, then there's some chance of getting a reversal next week. You'll probably know by midweek at least what's going to happen. Like crude price futures, we've been moving sideways in a range for an extended period of time, and it continues to do so. This is the last gasp lows down here. This is the main range through here. Here's the next higher level where price was unable to recover previously. A minor breakdown here. This is going to be increased supply in the future if price is able to move above the current range. This week saw price pretty much trade within the range of the previous bar all week on reduced volume and well below average volume. There was not much supply being drawn out. Selling pressure was low. So that might allow price to again move higher in response. It's been in this sort of range here for a little period of time now, and volume reduced this week. So selling pressure may be reducing. We'll just have to wait and see how it plays out. A break above this level would be quite a positive move and probably see price back up to these levels. If not, I'm expecting the most likely outcome is price to continue bouncing around the $70. It seems to be the sweet spot, just below, just above $70. When the market moves below $70, supply reduced this week, and when the price has moved above $70 previously, some supply begins to be drawn out. So that seems to be the sweet spot at the moment. Aussie dollar currency futures. This is the range that price has been trading in for quite some time. I suggested last week that there may be an equal and opposite reaction, breakdown and recovery, and that's exactly what we got this week, an equal and opposite reaction on the other side of the range. You can see it there. This happens quite a bit in markets, and now price is back almost centered within the previous trading range. Most likely outcome next week is a test for supply, like that. And then if that's successful and supply is found to be low, then the most likely outcome is continuing sideways within this range. So we'll just see how it plays out. But further trading between 66 and 68 is the most likely outcome in the near term. Bitcoin futures. Bitcoin futures have some form of accumulation zone in the background. I expect price was going to accumulate at this level. This was a bit of an issue which the market just had to accept. It soon got over these issues and the potential accumulation continued. You can see price broke out here, but it wasn't supported when it attempted to move above this level. This is the important level, and prices moved right up to the highs of the range this week, pretty much as we expected would happen when we looked at this last week. Last week we saw this little test for supply. Volume dropped below the average, which suggests that selling pressure was really low and the market was well positioned to push higher. And that's exactly what it did this week. Now, the most likely outcome this week, especially once momentum begins to fade, you may find there's a little push higher early in the week as the momentum tries to continue. But once that momentum begins to ease, the market will test for supply. This is the market moving into consolidation mode. It will attempt to absorb the supply that's been drawn out by the increase in value. And if supply or selling pressure is found to be low, that'll leave the market well placed to push higher again in response. The next higher level is at 36,000 in here, and it corresponds with a breakdown in the past. Now, there is expected to be considerably more supply above that. So price could accelerate up to 36, and then spend an extended period of time moving sideways as it attempts to absorb supply. And this could go on for an extended period because there is expected to be considerable supply above this level. You may even see price push above, drop back below, make a secondary push back below, test for supply, and continue pushing and absorbing, grinding its way. If it successfully gets up to 36, but then finds that this supply is really overwhelming. But we're getting ahead of ourselves a bit here. I expect the market will make a minor attempt to move higher this week. It could go up to 36. I think the more likely outcome is for a test for supply and a relatively brief and shallow period of consolidation first, and then an attempt to push up to 36 or towards that level. US dollar index futures, just quickly again, here's the lows of the range. Here was the breakout level, and you can see that prices come back to that this week. There was a test for supply below this level last week, and the low volume suggests that selling pressure was low. That allowed price to push up and close as an up bar. And there's the lows of the previous range where supply is expected to reside to the left. I think this is going to allow the market to push a little higher again next week. Now, that'll put some of the other associated markets under a little bit of pressure. You'll probably find the commodities under some pressure, and you find the Aussie dollar and currency futures under some pressure as well. And just one thing to look out for when there's increased strength in the US dollar and it puts some other markets under pressure, those markets that attempt to absorb or successfully absorb the weakness that emerges when the US dollar is stronger are the markets that are showing underlying strength, and they're the markets to follow more closely if you're looking to buy them for the upside. Okay, thanks for your time. See ya.